Welcome to Higher Education Advocates Podcast. This podcast is about supporting students and families as they navigate through the post-secondary complexities of college. From time to time, I will touch base on current events. Expect to hear jam-packed information that includes strategies and tips. The goal is to empower families and help them make informed decisions. Expect to hear from higher education professionals, HR professionals, tax pros, mental health professionals, financial aid administrators, students, parents, plus more. My name is Teresa Harris, and I'm a college financial aid expert. I'm also the founder and owner of Scholarship Momma. I have a master's in higher education, and I am an alum of Robert Morris University in Chicago. I'm a wife, mom, and grandmother. My heart is for our youth, but the information I'm sharing is relevant for all age groups. When it comes to college, my experience as an adult student was fantastic. I was eager to learn and ready to start a new career, and the only way I could pay for college was to borrow loans. One thing I failed to realize is the impact student loans would have on my future. I borrowed thousands of dollars during my undergraduate career, and as time went on, the amount I owed ballooned. As of this recording, I'm still paying off student loans, and I completed college years ago. For the record, I don't have anything against student loans, but I do believe in responsible borrowing, which is something I didn't do. As for the podcast, expect to hear from me on a bi-weekly basis. This podcast is available on Anchor FM and Scholarship Momma YouTube channel. For more information, check out my website, www.scholarshipmomma.com. Hey friends, so glad you can join me. This is Teresa Harris, aka Scholarship Momma, and welcome to Higher Education Advocates Podcast. I think everyone can benefit from today's episode with Tammy Burkley at Burkley Tax Solutions. Tammy, jump right in and tell us a little bit about yourself.
Hey, Teresa. First and foremost, thank you for having me. I really appreciate it. And then just a little about me. I've been doing taxes for about 12 years now. I started out at a major retail, H&R Block. I became an enrolled agent through a lot of their training. And then I jumped out on my own at Burkley Tax Solutions a couple of years ago. So I just love helping people get their tax life right.
I like that. I like that, your tax life right. Well, speaking of that, to my listeners, the year, of course, is quickly ending. So it is tax talk time because you got to get your tax life right. Right, Tammy? So let's
get it together. Like, don't wait until the time comes to start thinking about it. I want to get this together right now.
Exactly. So that is what our chat is about today with Tammy of Burkley Tax Solutions. So we're going to talk about taxes. So Tammy, here is my first question. How does the CARES Act affect the student loan?
Okay, so one of the major pieces of the CARES Act was the forbearance of student loans. Now, we did get word that they did extend it to the end of January, but right now is a good time to start planning and putting that number back in your budget because you will have to make arrangements with your lender and start back paying those payments.
Oh, so those of us that old student loans, you heard what she said. Guess what? That is me. That is me because I have already shared with my listeners, 1 in 4 Americans owe student loan debt. Right now, believe it or not, the student loan debt is $1.7 trillion and growing. So guess what, borrowers? Next year, we have to start paying back. But, so what Tammy is saying is you need to talk to your lender, get prepared to start paying back. So Tammy, what about those students who are in student loan default, prior to the CARES Act, they were already in default. What happens to them?
Well, if you are already in default, this is a great time to talk, to first of all, go to the Treasury, Treasury offset, call their number, and they'll tell you for sure if they're going to garnish your taxes. That's a line before you even file your taxes, so you already know, is to first go and see if you're on the Treasury line. Even if you're not, and you're in default, because if you're in default or not. And default is different than forbearance. Forbearance that we just talked about, they extended the time where you got to make them payments. Default is you haven't been making payments, you haven't reached out to your lender, it's on your credit now, and the consequences of that is they will take your taxes. If you get a tax return in 2021 and you're in default with student loans, they will take it. So my action item for you is to go to the Google the Treasury offset line, call them, and then the next step will be to contact your lender. If you know, they can give you information about who is going to take it, but contact the student loan lender and see what payment options you can do to get your student loans out of default. Because depending on the lender, some lenders may do 3 months or 6 months, and you may be out of default. Well, once you're out of default, you'll be getting your taxes. If you're still in default and you file your taxes, it's automatically going to go to the lender.
Oh, okay. Okay, that is great information for the students that are already in default. Please, please, please. The first thing what Tammy said was, and she gave an action item, she said Treasury offset. So contact the Treasury offset and then contact your lender to know what your payment options are. And so students, the next year, or shall I say student loan borrowers, next year, the administrative forbearance is over. So you need to get on that right now. Wouldn't you say that, Tammy? They need to get on that right now, not wait the next year.
They have, you just need to talk to your lender and figure out what your payments are going to be when your student loan is out of forbearance. Some may be the same. Some may have to be adjusted. It just depends on the lender. And just do whatever you can and don't let your student loans get in default. Okay. Always reach out to your lender. I found that student loan lenders were really lenient as far as payments until you get to a certain amount, meaning you can call them and say, hey, can I put this on a forbearance? Some of them have holiday forbearances you can do. Some of them have income-driven repayment plans. But the most important thing is you reaching out and communicating before your student loans get into default. Because once they get into default, IRS is involved, your credit score is affected, can be affected, and these other consequences of now you're ready to file taxes, and maybe that's taken too. So do whatever you can, keep in contact with your lender. If for some reason your income isn't where it's supposed to be, see if you can get on some income-driven repayment plans with your lender. But the main thing is just to contact them.
Okay. Thanks so much, Tammy, for giving us some detailed information as it pertains to student loan default, because a lot of times students don't know their options, but they definitely don't know that they have several options, just as you explained it. So the key is to contact your lender. Yeah. So, Tammy, if you are a college student, and what are some of the things that college students need to know about taxes?
So that's a great question, Teresa. The biggest thing you need to know about taxes is you may qualify for a tax credit for going to school. They have the American Opportunity Credit and the Learning Lifetime Credit. So what you need to get these credits is a form from your school. So be looking out for the 1098T specifically. And that shows that you got education and you've taken education this year. And the next thing you need to do is keep all your receipts. Now, on that 1098-T, it'll show the tuition you paid. Keep your brochure statements too to make sure it's accurate, but keep all your receipts. You can take your books. A lot of people don't know you can take those computers that you had to buy, especially we were all during a pandemic and everybody had to do homeschooling or do their school from home. So those computers that you had to buy, those printers, those can be put on your taxes. So you want to keep all those receipts. You want to keep all that information and put it on your taxes at the end of the year. There are stipulations based on if you're under 4 years, your first 4 years, or if you doing graduate school, there are different credits and stipulations. But again, keep all your receipts. Look out for your Form 1098-T from your school. If you've been moving around and change your addresses, this is a great time to contact the school so you can get your tax paperwork at the beginning of the year.
I love that you said that because students, sometimes they forget that and they don't update their addresses, and then of course you're not going to receive the information. So thank you so much again for being very detailed in your explanation with that.
Yes.
Students just forget. So thanks again. So, Tammy, what are the top 3 things that students can do right now in terms of taking action? Students and families, because this whole podcast is about students and families. So what can they do right now in terms of taking action?
I believe especially we all have to be conscious. The pandemic has changed all our lives. So if you weren't already doing these 3 things before, it's more important than ever. The first thing I have is save. Budget, and then stay out of debt, live debt free. So saving, if you have not already, a great resource is that Dave Ramsey says to save your first $1,000. Some people look at that's not a lot of money, but for a person that doesn't save, it's a mindset. You get that first $1,000 saved, you can save anything. So some people say, well, how am I gonna get $1,000 saved? I barely can save $50. Well, the first thing is to just start it. $20 a week, y'all. $40 if you get paid every 2 weeks. You cannot tell me you cannot throw $20 in there. That's your first, just $20. Every time you think about it, I need to make this $20 and just put it into savings. Anybody can do that. And by the end of the year, I promise you'll have your $1,000. So start right there. You can't tell me I don't want to. Y'all know y'all see all these timelines. People talking about $100 and $200, 10%. If you do not have the mindset and have not been saving anything, just start with $20. $40 if you get paid every 2 weeks. Put it in a separate account you cannot attach. So savings is going to be your number one.
Okay. And then,
budgeting.
Okay.
My favorite resource for budgeting is definitely Budgetnisa. Budgeting. You have to budget your dollars out here. It's y'all seen in the pandemic, everything closed. You needed to have first, if you had this some savings, you might have had a little backfall just in case your jobs or anything. But that budgeting, that's going to keep you on track and make sure you can keep going. So if you haven't already, even for businesses, college kids, families, budgeting is just going to save your life. Budget to success.
Okay. And then a debt free, huh? And I guess that makes sense too, huh?
That college kids, families, and anyone can do is live debt free. There's all kind of debt free resources out there. My favorite one is the debt snowball.
Okay.
If you are already not living debt free, don't know where to start. The first thing we'll do is to maybe use the debt snowball. Line up all the people you owe. Just pick the smallest amount. Pay everybody the minimum. Yeah. Pay your bills. It's to keep your credit good. But Pick the lowest one you know, and every time you get an extra $5, $10, $100, you would take that lowest debt. And then when you pay off that debt, use that money you were paying on that debt and put it towards the next debt. And keep going until you don't have any debt.
Yeah, you know what? And side note for the listeners, Tammy is right on that. I just want to share a personal story when it comes to savings. My husband and I, we did do a Dave Ramsey program where we saved $1,000. And what we found out when we saved $1,000, that our biggest expense was our car. We were having a lot of car issues, and every time we would take our car to the shop, it was $500 here, $300 there. And it's because of Dave Ramsey program that say save at least $1,000 your emergency fund. We were able to not, we were not in debt. We didn't have to charge it. It's a lifesaver. And so we have kept that mindset, because that's what it's about. We have kept that mindset to keep $1,000 in the bank for an emergency. So it's definitely, Dave's suggestion is great, because I'm a living witness that it does work.
Yeah, a quick story for me. Like every time I wanted to do a quick a bulk purchase, I always went back to the Dave Ramsey plan, and now I found it off a few times. But I always go back. Like when I went to purchase my first condo, I went back and said, "Hey, let me have $1,000," and then everything else I went and started making sure I was debt free, paying off any debt, using the debt snowball. And then I was able to save enough to purchase a property, but I wouldn't have did it without the mindset of, hey, let me start with something.
Yes, and so that you all heard it, college students and families. That is the three things that Tammy wants you to know: save, budgeting, and debt free. There you have it. So, Tammy, here is my last question. As college students are exiting college, graduation, yay, and they are going into the job market, what are some of the things that they really need to know?
Position yourself for authority always. Your network, the people you network with, are some of your biggest assets out here in the job market. And one main thing that I wish I would have known when I first started getting jobs is to invest in that 401k. When you the first time, invest in that 401k, don't spend it, and use the 401k as a backup to make loans to yourself. So investing in that 401k when you first them jobs, even at 16, 18, you go to a regular bank, any bank can get a 401k. Or a Roth IRA or regular IRA. 401k is usually through the jobs, but you can go through banks and get the same thing through IRAs. But investing, networking, and using your authority to move up. I know I've talked to many people who have stayed in different positions longer than they probably should, just by not using their authority and their skills to get out there and try to move up once you got the job.
Well, so Tammy, you said something key, because a lot of times as college students, they are excited to graduate. And I commend all of those 2021 graduates coming up. But the conversation is not had like sign up for 401k, because you know what? Sometimes the mindset is that I'm young and I got a long time to go before I start talking retirement. But when you agree, it's an advantage to start, your retirement plan when you hit the workplace, or even like you say, when you're younger, your retirement plan, your Roth. Why are you young? Because the younger the better, right?
Okay, so I want everybody to think of it the mindset like this. Say, you got your first job at 20. We're just going to put that out there. You see, some people get their first jobs at 16. Some people get their first jobs at 18. But now you're 25 and you want to buy your first house. You want to fund your first entrepreneurship. Well, you've been saving for 5 years. what some people, you can take a loan on that 401k or the IRA, and you're taking a loan from yourself versus having to go take a loan from a bank. And they're checking your credit. They're saying, hey, you ain't even, why should we, a lot of banks don't give entrepreneur loans to new entrepreneurs. So if you kind of get into that mindset, the earlier you start, the more compound interest that 401k or IRA will have. It's an asset. You have money over here that you can loan yourself. Now, my advice is don't take it out, don't cash it out, because IRS does want they do charge penalties unless it's emergency. But that 401k is going to be your best money, not going to say best money maker, but that 401k can give you a head start to some of the stuff that you can't save for. I personally use my 401k to pay off I took a loan from my 401k when I got my first property to pay off my credit card debt. And it doesn't show on your taxes. It doesn't show up through the bank. And then boom, I paid myself back. And then I still have my 401k. I didn't have to use friends and family to get a loan. And I had money out there that I had been saving for years in case of an emergency.
It sounds like a game plan. So college students, you heard it, and I just wanted Tammy to give you a little bit more details when it comes to 401k plans and Roth IRAs, because it's not a discussion that's had, and as college students, you are very excited to, of course, graduate and get your first job. But with that, you should start saving for your future. So those 401ks or those Roths, start saving that immediately. Get used to not having that money because you didn't have it in the first place, right? So, get used to that.
Yeah, the mindset is you're investing in yourself. So to kind of put it in the mindset of, hey, I done start making money now. Now, the savings, I can touch it real fast. That 401k and Roth, you have to think of a couple. You don't just go in there and grab it anytime your car break down and stuff like that. You use it for major stuff that you might need. But it's money that can be there and can help you in case. Like I said, I needed to pay off some credit card debt to buy a property. There you go.
So there you have it. Okay, Tammy, before we go, can you please give the listeners your contact information?
Yes, if y'all want to get any more tips, follow me on Burkley Tax Solutions on Facebook. Thank you, Tarisha, Scholarship Mama, for even having me. I appreciate it.
You are welcome. And to my listeners, thank you today for taking the time out. Thank you so much. And Tammy, we thank you for your important information as it pertains to tax and just your wonderful tips. Families, as Tammy said, please, 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 please. Cannot say that enough. Just please take some of Tammy's advice because, like she said, in terms of saving, budgeting, and a debt-free, all of that impacts your future. And so you want to be prepared. So college students and families, thanks again for taking the time out to listen to our podcast on today.
Thank you.